Good morning, good afternoon, good evening. Welcome back for another video. I posted this tweet last week. I was being sarcastic if you didn't know, but it says, market's going to pump soon. I'm selling a bunch of crypto to buy a house, pack your bags, hashtag to the moon. And then I posted another tweet. Don't congratulate me, by the way. The circumstances behind why I need to do this now involves the health of one of my children. And so, saw a lot of really kind responses from many of you, and I do appreciate that. Thank you so much for your thoughts, for your prayers, and all that. And I did debate, am I going to share this in a video? I thought, might as well share this in a video, just so you know, because some people have been asking, hey, could you let us know what's going on? And it's not, there's no lives in danger or anything like that. But basically, we moved to a new city in the middle of COVID, July of 2020. We decided to rent first before buying, just to get a lay of the land, to understand the city that we're living in and where we want to live. And we decided to wait a couple years. And so that time has come. In one regard, we were planning on buying a house this summer, or at least kind of waiting to see what's the perfect setup for us. And given the housing market and everything like that, what can we do? What can we find an ideal location and house? But that timeline got moved up very aggressively because our 16-month-old daughter, Sophie, was tested for lead, and she has high lead. And we have seen symptoms of high lead in her system playing out. She used to be able to sleep through the night, and now she's not. And so Mama Bear's not happy. I'm not happy either. But we've got to go. We've got to get out of our current, the place that we're renting, and we are buying a house. A little bit of a wrinkle with that, I have to put a lot of money down because I'm self-employed, and I can qualify for maybe like a $1,000 a month payment. So I'm putting six figures down on a house and getting maybe a $150,000 loan. And yeah, that's the deal with that. We believe that our daughter will be fine once we move out of this house that we're in and move into a new house without any lead issues. We believe it's the paint here. We've checked the paint at our new house, and things should be good to go. So that's the deal. That is why we're selling. I apologize or that's why I'm selling a lot of my crypto. I apologize for the clickbaity title, but that's the deal. And so we're not selling because of fears of a crash, or excuse me, I'm not selling because of fears of a crash. I've been very clear. I do not believe that we will have a weekly close below $30,000. And so, I do want to do some analysis here. Don't be scared by the chart. I'm going to clean this chart up in a second here, but I do want to say a few things. I am more of a fan of horizontal lines over diagonal. And so you see this diagonal line here. I'm very hesitant about drawing a diagonal line, aside from the fact that I'm seeing, we are rising within a channel. And I could easily draw another diagonal line here and say, hey, we are in a channel. I mean, if you look at the SPY over the I'm not going to click there now that I think about it. If you look at the SPY or the S&P 500, it was very clearly within a rising channel until the COVID crash. COVID crashed. And, the COVID crashed the market, but then we were in a much more aggressive rising channel, and we just recently broke out of that to the downside. And so, yes, diagonal lines are helpful, but I prefer to think in regards to ranges. And so I'm going to delete this diagonal line here, just for the time being. Oh, I deleted the fib levels. I was also going to delete the fib levels because what I wanted to do is just to use the fib levels to use markers as here's the top of the range that we are currently in. And this is the bottom of the range that we are currently in. And in between that, we have been ranging, and it's good to look at, and this is the middle line here is the middle of the range. It's good to look at this, and until something happens, until we break out to the top and don't have a false breakout like what we had at the end of March, but until we break out to the top or break out to the bottom, this is our range. And also, not only that, we are trading within a broader range, and I have that laid out here, a broader range of, this is over the last, over the last year, 16 months or so. In the last 16 months, I would say between 30 and $65,000. That is a broader range that we are trading within, right? But for now, this is the range. And so if you see us at the top of this range, that is a good time to short. If you see us at the bottom of this range, that is a good time to long. And also, of course, you know that I'm paying attention to the weekly moving averages. So I have the 20-week simple moving average, the 21-week EMA, and I see us move up to those levels, and that's a time that I'm going to short. If I see us move above those levels, I'm going to long until we get to something like the top of the range or the 200-day simple moving average. That is just my general disposition right now. So that diagonal line, I will open longs bouncing off of that line. But then the moving averages, the top of the range, and the fib levels that I've talked about, but that is for another time. And I've talked about these fib levels from the top of the $69,000 peak down to the $39,000 bottom, and I'll draw those fibs again, that these fib levels really matter. Horizontal lines matter. And so as far as price action right now is concerned, I am just going to operate on a simple fact that we are within this narrower range, but also within a broader range. And so once we see Bitcoin back up into the 60s, whether that happens in a few months or a year or even longer than that, I will initially start shorting at that range again. And so it's just one of those things right now where we've got to slow and steady wins the race. It's easy to look back at the past and just look at it from an outside perspective and think that happened quickly. But even, 2018 did not happen quickly. It was one of those things where it seemed like we were constantly wondering where the market was going to go until that major capitulation event at the end of 2018. Which presented a great buying opportunity. So does that mean it's going to happen now? No, very much so, because of the simple fact that we've had two distribution tops in 2021. And so let me expand this again. Forgive me for the crudeness of the chart again, but I wanted to show this chart. I wanted to show a different chart, something that I actually shared on my Twitter account. So let me go to that really quickly. But distribution tops versus blow-off tops, this is very important to understand. So we had a blow-off top. We've had a history with Bitcoin of blow-off tops. And what happens after a blow-off top has historically been a 75 to 85% correction. And so we had this blow-off top in 2017, at the end of 2017. It took a year for a 85% correction to take effect. And this chart does not include 2013, but the same thing happened in 2013. Two blow-off tops in 2013. Same thing happened in 2011 as well. But the last three tops that we have had have been distribution tops. So we had this $14,000 peak in 2019. That was a distribution top. And aside from the COVID black swan, if that didn't happen, what we would have had is probably about a 50 to 60% drop. We had a distribution top in 2021, early to mid, February to May of 2021 before that big dump in May. And that led to about a 50 to 60% correction. And same deal here. We had a distribution top in October, November, and then another 50 to 60% correction. I believe that should be the rule. If we have a distribution top and not a blow-off top, that we should expect a 50 to 60% correction. And so we are pretty close right now at $41,000, a little above $41,000, to the bottom of that correction. The bottom of the correction. Now, we can certainly go back down to the 30s and even the lower 30s. I believe that there's a possibility for sure that it's in the cards. But to expect anything lower than the bottom of this narrower range that we are in, it is just highly unlikely for a wide variety of reasons. And so if you are a trader, if you're looking to dabble as a trader, this is the range that I would recommend you pay attention to, this narrower range that we are currently in. If next time you see a move above the top of this range, that would probably be a good time to short. Now, of course, there's going to eventually be a breakout. But most likely what will happen over the next few months is when we get to the top of this range, we are going to get rejected there and we'll go right back down. And same deal, can we go to the bottom of this range? It's interesting that we've been hanging right in the middle of the range over the last week or so, and now we're riding higher. That's interesting. We'll see. But between now and the next Fed meeting, which is 2 weeks from now, I'm just not expecting any kind of aggressive moves to the top of this range. We might hang around the middle, and then maybe after the next Fed meeting, we'll move higher. So that's my general thought. I'd love to hear your thoughts in the comment section. Smash up that like button if you haven't already, and subscribe to the channel. But until next time, I will most certainly be seeing you in another video. My next video, if I can talk about it soon, will be why I believe we're going to see a recession. It's a high probability that we will see a recession, not a crash, within the next 12 to 18 months, based on a couple factors that I have actually never shared on this channel before. So stay tuned for that. But until then, I will see you in the next video. Peace.